All right, everybody. In this video, it's the last in the series of the workbook exercises for Chapter 2, and we're going to work on AP 16B. So in AP 16B, it's pretty similar to the last problem that we did in AP 15B, with a couple of distinctions. One being that we will have opening balances because this is not, the first month that this is a health clinic we're looking at. It's not the first month that the health clinic was in operation. So we will have opening balances, unlike AP 15B. And then in addition to preparing our T account schedule here, we're also going to come over and prepare the income statement, the statement of owner's equity, and the balance sheet. Okay? So let's get started. Like I said, let's put our opening balances in to start. So we have 15,000 cash. We're just going to put all these in. We had 6,000 of prepaid rent. We had 5,000 of prepaid insurance, $30,000 of equipment, $3,000 of accounts payable, no opening balance for unearned revenue that I see, notes payable of 10,000, and capital of 43,000. Okay. So now we're going to go through and look at the transactions here and account for all 12 of them. Okay, so the first one says we purchased plane tickets with $1,500 cash, so cash going down, and the plane tickets are to attend a business conference. So here we've got an account for travel expense, so we're going to put our expense there. We're going to increase expenses, everything balances, and we'll go on to the second transaction. Now we paid $3,000 cash to reduce the balance, this opening balance of accounts payable. So it was opening balance of $3,000. We're going to pay that down. So reduce cash by $3,000 and reduce liability by $3,000. You can see that goes to zero there. So our payables, our accounts payable is all paid off. Okay, number 3, the owner invested $5,000 of additional cash in the company. So let's go ahead and put in $5,000, and remember that when it's a contribution, and that's going to go into capital down here. So capital goes up, cash goes up, and we've accounted for the transaction. All right, number 4, we purchased $4,000 worth of equipment with a bank loan. So now we've got additional equipment, but we didn't pay cash for it yet. We got a bank loan for it, so we're going to put that bank loan here in notes payable. So an increase to a liability and an increase to an asset. And we're going to go on to the next transaction. Okay, we paid $1,000 for maintenance expenses, so cash goes down, expenses go up, and we're good to go. Number 6, we earned $15,000 of revenue from patients on a cash basis. So here they're paying us in cash. It sounds like they could be paying us, on account and paying us later. But we are earning that revenue immediately. So we have an increase to revenue and an increase to our cash assets. Number 7 says we received a $900 bill for utilities used during the month, and a check was issued to pay the bill immediately. So we paid the bill, so cash went down, and we've got utilities expense being recorded in addition. Okay. Okay, the next transaction says that we recognized $2,000 of prepaid rent as an expense. So essentially what we're saying there is we started the month with $6,000 of prepaid rent asset, but during the month, the monthly rent was $2,000. So we had prepaid this previously, but now, because we've stayed there for the whole month, we've used up, $2,000 of this amount. So we're going to reduce that prepaid rent by $2,000, and we're going to record rent expense of $2,000 to offset that. Okay. We paid $100 of interest for the month with cash, so we'll reduce $100. Interest expense. And then we paid $4,000 in monthly salaries to all the medical practitioners. So cash goes down for $4,000, and we must have a salaries expense here, $4,000. Okay, we received $2,000 cash from one of its clients. Okay, so we got the cash. Excuse me. We got cash in, but we're not going to perform these services until the following month, or in March, so 2 months from now. So it's not our revenue yet, but instead it's unearned revenue. So asset up, liability up. And finally, the owner withdrew $2,000 for, the owner withdrew $2,000 cash to pay for personal expenses. So we're going to reduce cash, and we're going to record a withdrawal for that as a reduction of the owner's equity in their capital account. Okay, let me make sure we've got everything in here. So now we're going to go through and again auto sum, and then we can just drag over that formula to make sure we summarize everything. Subtract the bigger from the smaller. You get 24,500. We just have one reduction in prepaid rent, but we had to subtract the smaller from the bigger. So the ending balance of prepaid rent now is 4,000. We didn't record any prepaid insurance transactions. Let's summarize the equipment there. We had one addition, one piece of new equipment. We had an opening balance of 3,000 here, but then we paid that down. So here when we subtract those, you just end up with a zero balance. We have a $2,000 unearned revenue. Our notes payable now is 14,000. Whoop, messed up my formula. 14,000 now. And our capital account with that contribution is 48,000. But then we also had a withdrawal, and we will see that accounted for here in our statement of owner's equity we'll prepare in a moment. Okay, and then we've got just one revenue transaction and then all just one expense each. So again, I'm going to copy and paste in these formulas like I did in AP 15B just to make it simple. All right, now let's calculate. So revenue was 15,000, and then expenses, let's add all these totals together. Come out to 9,500. So 15,000 minus 9,500 gives us $5,500 of net income. So we've got income. That's good. We're glad to see that. Now we're going to add up all of our assets on the balance sheet here. And then we're going to add up all of our liabilities. Oh, I see an error I made here. I need to carry that down. Okay, and then we're going to take owner's equity ending balance, or the specific capital account. We're going to add the net income, and we're going to subtract the withdrawals. So capital beginning balance plus the contribution / investment plus the net income minus the withdrawals. And then if we add the equity and liabilities together, we balance. We can see there's the same amounts, and we're happy that we've got everything in. Okay, so now let's jump over to the next tab, because the problem also asks us to prepare month-end financial statements here. Okay, so we've got the income statement, the statement of owner's equity, and the balance sheet. And we want to start with the income statement, so that's why it has a 1, 2, and a 3 listed here. The income statement comes first, statement of owner's equity comes second, and then the balance sheet comes third. Okay, and I want to show you all something here that hopefully in Excel, kind of an Excel move, a common thing that you'll do, and that's just linking between these different spreadsheets. So when we want to put in revenue, we've already got that listed, on this spreadsheet. If we want to put in these expenses, those are listed over here. So we can click into the cell here, and we can say equals, and then take your cursor and click back onto this other tab, and you can say equals that total, and then we can hit enter, and it'll reference to that other tab and pull in the amount that it has in that cell there. So just kind of it's a very common thing you'll do in Excel. Okay, and then here for expenses, we'll just do the same thing. I'm just going to go through go in the cell, push equals, click onto this tab, click on the other cell in that tab you want to reference. And we're just going to go through and do that for each one. Whoa, sorry, I messed up the formula there, equals this, and I believe we're on rent expense, hopefully. No, that was supposed to be salaries expense. There we go. Travel expense, utilities expense. All right, and that should be everything there. Total expenses, then we'll put it in this column. It's the structure here that the book uses, and I think it's a good one, is just to keep all of your revenues and expense totals in this other column. So then we can use the auto sum, but we don't want to auto sum this. We want to auto sum these. So what we can do here, I'll show you a little Excel trick. We can move this range that it's adding from over to here, and then we can move our cursor and kind of tighten that up so it just gets the cells that we want for an auto sum. Now it's summarizing all of those. And then we can take our revenues minus our expenses to get 5,500. We've already done this work. We're just showing it in a different format, basically. So 5,500 here, net income. We're just presenting it in more of a formal presentation for the income statement. But one new financial statement we haven't seen yet is the statement of owner's equity here. And that's just going to break out the change in equity that we had. So we're going to start with a beginning balance of 43,000. There's our opening balance. Then we added in this $5,000 investment. So that was going to increase it. We're putting it in the add amounts. And then one thing here, I highlighted these the same color and put a little arrow to hopefully key you into the fact that we're just going to take net income here and bring it down to our statement of owner's equity. So here we can again do equals and just click in there and hit enter. And it's going to just bring down that number we previously calculated. Okay. Now we did have the owner take money out. So here in that withdrawals, we can just link that number there. And to get our ending equity amount, which we showed here as 51,500, and to recalculate that with a little more detail in this formal statement, we have our beginning balance plus our investment / contribution plus our net income minus our withdrawals leads us to 51,500. Okay, and then you can kind of see, I'll put this right in first thing. So then this is the reason why we do the income statement first, is because we need to calculate net income to bring that to the statement of owner's equity. And then we prepare the balance sheet last because we need to take the final owner's equity here and bring it over to the balance sheet. So I'm going to link these together, start there, and then we'll put the rest in. Okay, so now we just need ending balances for all of our balance sheet accounts. So we'll start with the assets. I'm just going to link over to cash. I'm going to link to prepaid rent. I'm going to link to prepaid insurance. And I'm going to link over to that equipment account. Okay, so I have all those numbers in, and then I can just do an auto sum. So our total assets is 67,500. Hopefully that agrees with our, yep, so that agrees with what we calculated before. So looking good there on what we calculated on our T account worksheet. Okay, now accounts payable. Let's go in and grab that. Oh, we have nothing there, so that's cool. All our amounts owed or paid. We had an unearned revenue amount of 2,000 and a notes payable balance of 14,000. Okay, so then let's use auto sum here. So our total liabilities is 16,000, and then owner's equity we already brought over from our statement of owner's equity. So then we just add liabilities plus owner's equity to make sure that these balance, and you can see 67,500 assets equals 67,500 of liabilities and equity, and we're in balance and we are looking good. And so this is kind of the formal presentation of these three key financial statements for a business, and it's the same information essentially that's presented on the T account spreadsheet, but you wouldn't necessarily give a T account spreadsheet to like a banker or someone asking to see the financial statements. This is kind of the standardized set of financial statements that you would provide to anyone. This is more normal. This is kind of like your notes if you're an accountant, a little bit of the detail behind the scenes, and then when you put all the financial statements together, this is your resulting work essentially that you would present out to whoever is asking to, if your CFO comes and says, what was the financial statements for the month? This is, what you would provide them, not the detailed information information behind the scenes. Okay. Great. All right. Well, that brings us to the end of the workbook exercises for Chapter 2. Hopefully that was helpful, and I hope you learned a few new things in Excel and got to practice some of the skills that we worked on in Chapter 1. And let me know if you all have any questions, and I will see you in class. All right. Thanks, everyone. Take care.